Welcome everyone to this week's Member Town Hall, where we do these every week to bring everyone in the community up to speed on the latest developments in the crypto market, investment trends, and we also get a bit of time for Q&A towards the end of these sessions every week for members to get a chance to ask us anything relevant about crypto that's on their mind. So I'm joined this week by Leon and Bergs. How are we? Good to see.
Hello. Good morning, everyone. Excited to talk about crypto this week. A lot of stuff has happened.
Yeah, going great, mate.
Yeah,
spicy news overnight, so looking forward to getting into it.
Yeah, no, it's always some major developments ahead of these town halls, and yeah, like clockwork, there's been a lot of news overnight, so it's causing prices to sell off in this case. So I might just before we get into it, I might just quickly a bit of an announcement or update from Collective Shift here. This week we did launch our very first pro monthly sort of email newsletter. So that was a response to sort of consistent feedback from members who really just wanted something direct to their inbox to just when they don't have time to keep up to date with crypto. We know it can be hard. You know, it's just something there for them where we sort of wrap up the month that was only the most important stuff. We preview a bit of the upcoming month, you know, where we think the market's going to go and why. And then I also add some of my own commentary as well of, you know, where the market is at and what I'm currently doing from an investment standpoint. And then we also add in a video, audio, and text. So multiple formats, really modern sort of newsletter. So that was fun to launch this month, and looking forward to doing the next one.
It was fantastic. And if you're very time poor, this is the thing for you where you could just watch the video or you can press the audio version, listen to it while you're making dinner, and in like 10 minutes, you're up to date. It's incredible. It's definitely the thing to listen to if you're time poor and you want to get across crypto.
Yeah, that's the aim. We will get into it though in terms of, a bit of a market update. And this is probably one of the most significant market updates, at least 2023 so far, that we're giving you here. We've got Bitcoin down at about 14% over the past 7 days, and ETH down, much the same, about 15%. So I think last time I checked, Bitcoin was like trending towards 20,000. Yeah, it's actually down to about 20,300, and then ETH's at about 1,430 in US dollars. That's the lowest I've seen it in quite some time. It's probably only been, a number of months, but in crypto time, I think we started 2023 off a lot of optimism coming back into the market. People, confident the lows are behind us and, we can continue to start rallying. That did happen, but it's been a bit of a sharp downturn, which is, we actually sort of predicted this back to that monthly newsletter. I was of the opinion anyway that, March was going to be a red month just because of how explosive the rally had been in January and Feb. And also like a lot of factors haven't really changed in terms of like the macro environment and other overhangs such as regulation threats, which we'll get to pretty soon. Just to then finish off this market update with, that sort of macro side of things, or even more just like the stock market in the US. I think, it's a loose correlation, looser than what it was in probably 2021, early 2022, crypto and equities. But it's still, a moderate correlation. And when you see something overnight with what happened in the US, which I think was like, one of their strongest days in the red for like a number of weeks, that really did also contribute to crypto selling off overnight as well. So, I've even got here that, there was a combined $1.5 trillion in value wiped out from the stock market, the combination of the US stock market and crypto markets. $1.5 trillion was wiped out in under 2 hours today.
Isn't that just incredible? Like the sheer amount of money that's out there sloshing around, and we're able to lose that much of like 1 trillion. That's crazy. Like you can't even imagine what 1 trillion looks like.
No, it's inconceivable, really. I think a lot of that, just wrapping it up, the consensus was from analysts that it was just a lot of sort of selling ahead of the jobs report that's coming out tomorrow in the States. The central bank, like Federal Reserve members, have sort of cited this jobs report a number of times, saying that it's like really going to be a key factor in influencing their next decision with respect to like monetary policy, which is actually coming up, I think on the 21st and 22nd. They're meeting for 2 days. So yeah, this is, I think, a lot of risk off sort of behavior. I think, people selling out of fear of what this jobs report could be, because as we've been talking about in town halls, they keep raising the rates, the Fed, but the economic data keeps coming in like really strongly, which is not what they want. There hasn't really been any signs that inflation has started to, or they've started to be able to curb inflation. Yes, it's fallen slightly, but it's still way, way above where they want it. So that's just basically where things are at the moment. We'll hand over to any of you if you did have any extra comments there.
Yeah, so I was actually listening to Mr. Powell here in one of his speaking events, and he sounded very hawkish, and hawkish is like, we're going to be more aggressive. Basically, what he was saying is that we know that data looks okay so far, but because of the history in the entire Federal Reserve, we're not going to slow down anytime soon. We're still going to keep increasing the interest rates. So like we said, like we discussed a couple of months ago, nothing has changed really. We're still looking like there's a whole bunch of rough seas ahead of us. So as I said, I expected Bitcoin to go down. Now it's gone down. We're in a better position to make an acquisition if we want. Just be prepared. Some people have a plan out there. Have your plan. Has it reached the prices you want? And is it time to start accumulating the strongest asset in the world? I was listening to him. I was like, yeah, we expected this.
Yeah, that did surprise a lot of people. That I think it was actually the first time he'd spoken publicly in like over a month, because their February meeting was like for 2nd of Feb or something, and then so you've got a big 7 or so weeks between their two meetings. So there was a lot of anticipation for this sort of presentation or speech. I think it was in Congress, and yeah, he did come out quite a bit more like. Continued to be a bit more like, hey, we're going to keep rates higher for longer, which is not what the stock market or risk assets really want.
That's right. And I went to a seminar recently, and the guy presenting has billions and billions under management of the major companies. And he basically has all of their data, and he looked through, employment expenses, all these kind of things, and costs going up. And he was saying inflation is a lot higher than what's actually being reported.
Wow.
Yeah. And that's like the true insight with the real data, rather than how government gets data through surveys or the models that they use. So it was a really interesting lens as well. And we're hearing that repeated now with the government saying that it's not like you're raising rates, but it's not curbing inflation.
Yeah, so we know this. Like, we know the data that the government gives us isn't like the true actual data. We experience it ourselves.
And you just know, because look at petrol prices, right? Or housing prices or food. Like, it's not like 8%. It's a lot more than that. It's like petrol's almost doubled, right? It's gone up a lot. That's what we're experiencing, right?
Yeah. And I'm actually just looking at the CME FedWatch tool. The market is pricing in 63% that we're going to be a 50 basis points hike.
Really?
Yeah.
Wow.
Yeah. So that's higher than what we expect, right?
Wow.
Crazy.
I remember last week when we talked, it was at 28% or something, and that had increased a lot. Like, that had increased a lot. I think it was like 90% thought it was going to be 25 basis points about like 2 weeks ago.
That's right.
Wow, that's really big.
Influenced by this hawkish language that he's been using now.
Yeah. All right, that's So the rubber's going to meet the road at some point, like this year.
Yeah. I think they feel like that's the only lever they have, right? To increase interest rates. But after a while, you got to slow down. You can't keep increasing interest rates, because the government has a whole bunch of debt that they can't pay back, and they're going to just keep accruing debt. The debt clock. If everyone's familiar with that. So at some point, they'll be like, we got to go back this way now. So it's just a matter of time.
Yeah. So I think, as I've said, they're happy to overshoot it, because I think the consequences, in both scenarios where they undershoot it, I think that's like significantly worse is what they keep saying. But still, like, far out, the short-term consequences when you do overshoot it are still pretty drastic.
Exactly. But it's a much better option than letting inflation run out of control, because we know what happens then.
Yeah.
And things get really, really bad. So let's take the worst of two options and take heavy-handed action up front.
Yeah, for sure. So, that definitely has weighed over crypto prices in the past, 48 hours or so. But yeah, probably more significantly has been impacting prices has been, the news, well, overnight and even, probably 2 days ago it started when, Silvergate, we've talked a fair bit about them in recent town halls. Just again, they were like the biggest, like, out of all, like, they were probably the most friendly and the most widely used, like, crypto-friendly bank. They've been around for like about 20 years now, but they really, like, were one of the first to warm up to the crypto industry and start servicing them. All the major exchanges, custodians essentially use them. They had this SEN, this, like, network. It was almost like an internal blockchain, which let these industry participants actually operate 24/7, which was, like, really sort of beneficial. But yeah, we know they've been having issues. I think even Nick was saying that I think they had withdrawals of 70% in Q4 last year. Like, so they were actually able to weather that. Like, they had the funds to match that, but just like that, it's such a bad, like, their reputation was like, really took a blow after they ended up, they were essentially banking FTX and Alameda, which, turned out to be one of the biggest sort of frauds in history. So they really took a reputational blow. And turns out this week, a couple of days ago, they announced that they're entering voluntary liquidation. So, they basically assessed things and just pulled the pin, which is, kind of like not too surprising. I think we even talked about the possibility that this was going to happen just last week, and what that would mean. I think our overall consensus was that short term, it wouldn't really impact prices that much because there's already it's been de-risked so much. But I think our conclusion was that, like, medium term, it's probably like pretty bearish because it just is another sort of like data point that. Another indicator that, like, this debanking of crypto and the options for crypto companies in the US to get access to US banks is, like, diminishing, like, very quickly from what was already a very small group of crypto friendly banks. And that's concerning for markets because, again, it's for better or worse, the market reacts a lot to US developments. And at the moment, it's pretty dire out there for sort of the US crypto industry.
That's right. And if you think about this, it's like in crypto, when you hear the good news, you hear about prices going up, a lot of innovation. Those are the things that kind of spur price action. And now we're hearing about, FTX, Three Arrows Capital, we've got Silvergate. It's this kind of chain. And a lot of companies closing as well, that really negative sentiment coming in. And you're right, it was almost a self-fulfilling prophecy where someone raised the flag, they lost, 70% of their deposits. And then it's almost like a involuntary run on the bank, right, where people just want to get their capital out. I am actually really... I'm glad to see that they have entered voluntary liquidation. And I did see a few posts saying that they would be able to cover their deposits, which is really good. So, you get the external people in, they run through your company, they make sure that deposits are covered, customers are paid, and then the company either comes back or it closes. So it's good that they've taken that strategic action and really placing customers and creditors first.
We can make a distinction between, for example, Silvergate, a bank like Silvergate, who are under heavy regulation already. Like, they have public investors, they have annual meetings and all of this sort of stuff. And compare that to something like FTX or Binance, where it's more of a gray zone. Like, you don't actually know where everything sits. So, like, we see what happened with FTX, and they're struggling to try and find out where all the funds are, where all the data and documentation is. So I think in that sense, yes, it's better that they're able to enter voluntary liquidation because investors or the consumers or customers are way more likely to get their funds back or be able to exit the system if they want. Whereas in FTX, no, you're not getting anything back anytime soon. I like to make a big distinction there that even if it's a crypto exchange, there is way more risk compared to a normal bank. But then again, you don't get much reward for being with a bank nowadays anyway.
Yeah, spot on. I think so. That was like the first sort of event, but now here's where it gets a bit more, a bit worse. I think overnight, there's been sort of two events that separately have had actually probably a bigger impact on markets than what Silvergate. As we said, Silvergate, not that surprising, still not good to see. But we've had. Probably, let's start with we had two. We had there's something to do with the definition of ETH as a security, and then there was another sort of bank. So we'll talk about this one first. There was just news overnight that Silicon Valley Bank, which SVB is what's commonly referred to as, they seem also to be in a bit of strife. There's rumors going around of like a bank run on Silicon Valley Bank. They're actually I think like last time I checked, the 17th or 18th biggest bank in the US. They kind of service a lot, given the name, they service a lot of tech companies, and they were also a crypto friendly bank as well. And their share price after hours, like after the stock market closed, within a couple of hours, their share price fell 60%, like an altcoin. like that's like one of the biggest, banks in the US. Their stock price fell by 60%, like after hours. There was some announcement as well by the company in relation maybe to issuing some more stocks and raising some more capital. I think that's what it was. But yeah, it's I'm a bit concerned. Like if that one goes, like I'd be like quite concerned, I think, in the short term for crypto, because we've already lost Metropolitan Bank, like Q4. They were a crypto friendly bank that they said, okay, we're done. We're not doing crypto anymore. You got Signature Bank, which is another big bank. They have Signet, which is kind of like what Silvergate's SEN sort of network is. Yep. They sort of announced they were like reducing and making it a bit like not as usable. So Kraken, I think, was one that actually sort of stepped away and cut their relationship with them. You got Silvergate, which was the most popular one in the crypto industry. They're gone. And now you got Silicon Valley Bank, like under some clouds. And there really isn't too many left when you're talking about crypto friendly banks in the US. JP Morgan, sometimes like will bank probably more sometimes like the bigger companies. BNY Mellon sometimes will bank like the bigger crypto companies, but if you're a startup in the US, I think it would be extremely hard at the moment to even just be able to pay your employees and whatnot. Which again, for us as investors, it is an indirect relationship, but it's a significant indirect sort of relationship on prices, for sure, just with overall sentiment. And you got some hostile crypto unfriendly sort of regulators doing some victory laps, this week, saying like, oh yeah, we told you, Silvergate was a bit dodgy and whatnot, but they almost they almost propelled it. They almost like propped it up and made it a bit more like come to fruition in a way by just leaving crypto in this sort of gray area. So yeah, that's where things are at with Silicon Valley Bank.
Yeah, these senators and stuff. Elizabeth Warren, I think, was one of them. They started the whole bank run. They started this like, hey, everyone, look over there. They don't look like they're doing what's right, and so everyone starts looking, and now everyone starts taking out. But I wanted to provide some commentary on this. Like this SVB Financial Group, yes, their stock plummeted like so much. It's just like an altcoin. And so you think the banking system is a bit better than the altcoin market? Think again. But then I also think who's going to benefit from this? I think not just America. Sure, in the short term, we're going to lose some percentages here, BTC and Bitcoin. But because they're Operation Chokepoint, we talked about this before. They're trying to choke the banking system of the crypto market, so no fiat can come in, and then prices won't be able to increase. But America is not the only country in the world. There are lots of other countries in the world that are helping the crypto ecosystem. Europe is going crazy. Thailand, I think, currently just came out with something saying, yes, we're going to create a crypto hub, something like that. So yes, while there is a whole bunch of money in America that can help the crypto ecosystem grow, it's not the only one. Europe, African nations, sure, but Asian countries, Australia, we're still going strong. Singapore, exactly. Hong Kong.
Yeah.
So
yeah,
I think yes, we will suffer in the short term, but it's to America's detriment. They're losing all the innovations. People are saying, don't, like XRP's CEO just came out and said, hey, you crypto companies, you really shouldn't be in America now. You need to start leaving. That's what he said in a press conference very recently. Right. And that's a real thing to say to people. Be like, no, America isn't great now. Let's go somewhere else. That's the beauty of crypto.
Yeah, I love that. Jurisdictional arbitrage. And even now, like, we're coming up to crypto conference season in the States. And it'll be interesting to see if next year that's actually held in the States or if it's held somewhere else.
Good point, actually. Let's see what happens.
Yeah, I know they moved consensus from New York. I think, partially because of New York's, like, famously as being, like, hostile to crypto. And they were like, well, let's just stop giving you this massive conference. And I think, but we might do that from a national level soon. That's a great point. And well, it's actually speaking of New York, actually, that actually brings us into this next story that I think has actually contributed to the sell-off as well. It's a very scary headline, and kind of a bit nerve-wracking in terms of the sense it's happening. But in terms of what happened, so the New York Attorney General, they are suing Kucoin. So they are actually a pretty, like, solid mid-tier exchange. They've been around for a while. They list, like, a lot of altcoins, but in this sort of lawsuit, I don't know what. For allegedly violating securities and commodities laws in the state of New York, and then probably the most important thing that people are getting concerned about is. In this lawsuit, they claim that ETH, like, so the native token of Ethereum, they claim that it is a security. They listed a bunch of other tokens, but this is actually the very first instance in the US where
public figures come out to say,
it's actually. Yeah, it's the first regulator in the US to claim in court that Ethereum is a security in a lawsuit. So this is, like, really important. I guess it was always sort of going to happen whilst we're in this sort of state, this grey area, which we almost perpetually seem to be in. But look, at this stage, that's why I said it's a scary headline, but there are some things to, like, note here that, this is, like, the initial sort of lawsuit filing. These things tend to take quite a while. And then also, will they be successful in this sort of claim or allegation? Will the court, agree with them? That's also sort of unknown. But yeah, nonetheless, I think it's contributed to the sell-off this morning.
I don't doubt that. Reading the entire press release, it was actually funny to say that the New York Attorney General's office, led by Letitia James, they actually signed up for a Kucoin account. They deposited funds and they started trading and buying and selling Bitcoin and Ethereum.
Really?
Yeah. And then they also deposited into the KuCoin Own program as well. So they're like, yeah, this is a security because they experienced it themselves. So I think currently they're biting back. We've got the whole article here. I've got the whole press release. Sorry. And they're saying, why do you not have any, like, geographic or geolocation restrictions? Why aren't you blocking IPs from America or at least New York, where we are based in? So they're demanding all of this sort of stuff from KuCoin, like blocking the app and all this sort of stuff. This is like nearly killing KuCoin in that state. It's going to be very, very hard for them to keep going like this. And they probably don't have money to fight all of this in court. This is going to be dragged out for KuCoin, so it doesn't look good. I wonder what the KCS token is actually doing right now.
Yeah, and this is actually what we expected to see, right? We expected further companies to close and regulation to be heavy this year. This was, I think both of you, this is your predictions for this year when we did that episode in December. So this is definitely what we expect to see, and things will get worse before they get better. But this is what the crypto industry needs in order to move forward. And again, with this volatility and potentially negative sentiment, this creates really, really good opportunities for people that want to accumulate long term.
Yeah, accumulate pristine assets. I think when Bitcoin, Ethereum, your tops. When it comes to like KCS, for example, for an exchange that's currently being sued, might have to look at your risk tolerance for a crypto token like this. But as Berg said, yes, we totally expected this. This is what, when Luna happened, when Terra happened, when 3AC happened, we're like, guys, they're going to use this as fuel and come after us. And hey, they're coming after us. So over here at Collective Shift, we're able to predict that. Hopefully everyone else is prepared.
Yeah. It's like validating in a way to see that your predictions are becoming true, but when you're going through them in the moment, it's like, they're not good. You remember that the predictions actually weren't good.
Yeah, like, oh crap, why did we think that? Oh.
Yeah. So no, I think it's I think when you go through their reasoning for their argument for why ETH's a security in the lawsuit, there's traditionally been arguments that have been more around, it goes to proof of stake. So, you're staking it and you're getting a dividend. That's therefore it's a security, which like is a very like weak argument. But they've grown up and they've done some more thinking, these regulators. And this one I think is like I'm no lawyer, but just off reading it, it sounds more convincing than that other weak argument about staking, because their argument is like, there's this core team, right? And they announced, they did a sale like in 2015, 2016. Unfortunately, there's some like pretty damning sort of footage of like Vitalik and Joe Lubin sort of like presenting like why you should buy ETH, and like basically like implying that like it would be a good investment, like when they were selling, when they were presenting and raising the ICO. And then, 7 years later, like they still like it or not, they still have like a major influence over like the direction of the protocol, if you're being honest. Like even the merge, and, I think even in Letitia James like cites it in their lawsuit. They sort of mention even with the merge, the proof of stake, they quoted a developer who said something like they sought approval from the Ethereum Foundation before they could do some sort of upgrade. And this was only last year. Like there is this Ethereum Foundation entity, which a lot of them goes back all the way to the origins. Like, so, when you read it, you can get in this mindset of like, it's not as clear whether it is a security or not compared to something like Bitcoin, which is just like so easily not a security. And they've even said that. But then you've got like the commodities like CFTC sort of regulator, which they're still saying, hey, ETH isn't a security, it's a commodity. Like, they want to regulate it. And they said they've done extensive legal reviews. And they've thought for many years that ETH is a commodity. So, eventually we just need Congress. Like the Congress has to like decide whether, like, it's just so like ridiculous that this like goes through like the courts, and like that's like it's just the way it is, I suppose. But such an interesting decision. Absolutely.
And I think generally for people, if you have funds on an exchange like Kucoin, be very wary, and I would probably look at removing those funds. When a company is going through lawsuits, they're a mid-tier exchange, they're probably going to be burning through capital with those lawsuits. So just consider your funds on those exchanges and where they are best placed.
Yeah, for sure. So I dare say in about 7 days' time, next town hall will, these might be developments, particularly with that Silicon Valley Bank. But yeah, that's definitely a breakdown of, what's moving markets at the moment, and how it relates to you. But yeah, we can leave it there and move things on to, just quickly sort of wrapping up, what happened this week and why did it matter? I did just want to talk a bit about, it was actually quite a significant week in NFTs, which have, just like been absolutely annihilated in terms of like volumes, since about like 14 months ago or so was probably their peak, and they've slowly kept fading. But there's still like fundamentally some like major developments happening. For example, just to reel off a few here, Yuga Labs, probably the biggest NFT company out there. they actually still raised like $16.5 million worth of Bitcoin this week from a 12-fold collection. Their collection, which they called 12-fold, which was deployed on Bitcoin or inscribed to Bitcoin. So that's like a lot of capital to raise in a market that's like very, very like a grim outlook at the moment. Moving on, you've got Amazon. Like we've talked about Amazon previously in recent weeks, but they've slated to be launching an NFT sort of initiative. It's been reported that they're calling it reportedly launching this month. Amazon hasn't actually said anything publicly about it, but reportedly we got news this week that it's going to be tied more towards like real world assets. So maybe even using it inside the Amazon marketplace or whatnot. Like notably, this isn't related to like AWS. Like everything we talk about with blockchain and Amazon tends to be the AWS product, which is like by far their biggest and most profitable product. But this is actually more not that department. This is just like Amazon.com sort of thing that's going to be announcing an NFT initiative this month. So stay tuned for that. And particularly, I think I'd commented on it in one of our member reports previously, but yeah, I would expect this to be launched on Avalanche, given that really favorable news and partnership that happened about a month ago between Amazon and Avalanche. I think it would be a bit weird, to be honest, if it wasn't built on Avalanche. And that could be actually a bullish catalyst for the AVAX token. So that's just something to sort of look for there.
That's a great point there. I didn't actually catch that. It was Avalanche itself. And I think they're currently aiming for May is what I see here in the article.
Okay.
Yeah. But, like they haven't officially said anything. Yeah. This is rumors from people who work there, so not really reliable source. But I just wanted to say, like, they have a whole market. They have a whole bunch of customers. And this is targeted at Amazon Prime. And they're saying like 167 million Prime members in the USA. And, you add digital collectibles on top of that. You don't name it NFTs, just like Reddit did. It's not an NFT, it's a digital collectible. And holy crap, you have onboarding millions and millions and millions of people into a smaller blockchain, not even Ethereum, but a small blockchain. Massive price movement there.
Yeah, definitely. And then even just, saying on that sort of, corporate or company sort of adoption, Starbucks is another one that's like really like leading the way. It's probably another one similar to Reddit that's sort of, being showcasing what NFTs can do in terms of actually using them inside your existing product. And they actually just, I think a few hours ago, did their first sort of sale of NFTs. So on their Starbucks Odyssey platform is what they call it. That's deployed on Polygon, which is just continues to make these sort of announcements with these companies. Apparently that the value of that NFT started at about $100. It was a limited edition sort of sale, I believe, just reading through 2,000 of them. So there was a collection of 2,000 sold for about 100 per item. Apparently those have already like 5x'd and they've gone up to like 500 a piece, given it's sort of the inaugural sort of collection. I think they call them stamps. So again, similar to Leon's point, they don't call them NFTs. I think in this case, they're called stamps. And again, I think it's another, I sincerely hope like this project and this initiative goes well for Starbucks, because, if it turns out to be a flop, it's just like if you're sort of pitching to these companies, if you're working in sort of an agency or something, like you really want to point to some case studies where like it's actually been a value add for these companies and, actually added to, their different metrics of, measuring the value of their customers and whatnot. And you would say for Reddit so far, it's been a success. Nike, yeah. Yep. Even the Australian Open has been like successful over their 2 years. And then, Starbucks here, early signs are pretty promising. It's good to see these things finally starting to get going.
Yeah, it takes time to build the narrative.
Yeah.
You need one case study here, another case study, and all of a sudden you have 5 or 10 great ones, and everyone's like, yeah, well, this is the path to take because this worked for all these companies, Reddit, Starbucks, Adidas, Toys R Us, whatever. So yeah, I think no one wants to be first, and then no one wants to be last. So we'll have like a point at the top where everyone's like, okay, we have enough case studies to say this is successful. Let's go down the route, and then we're done. We're going up.
Yeah, absolutely. And then, just finally on the NFT side of things, we get, NFT. Oh, well, sort of an artist who works with like artificial intelligence, AI, Claire Silver. She actually got her, one of her pieces, it was, I guess, accepted to be in the Louvre, which is, in Paris, the world's most visited art museum. So again, more promising signs again that just NFTs are by no means dead. And you've even got these prestigious museums agreeing to like showcase some art, whether it's NFTs, whether it's AI generated, which has been sort of a controversial area in sort of late 2022, early this year. But yeah, her sort of collection she has many sort of NFTs that she's sold over the years. But one of her collections is deployed on Braindrops, which is sort of I did a post recently about 3 sort of low cap tokens that I'm watching. And I sort of cheated a bit with one of them because one of them I said was Braindrops, which is actually itself a platform which has a bunch of NFT, probably about a dozen or so NFT collections deployed on it. But Claire Silver's back then was still like the most valuable. But I think that's gone up from about, I think 10 ETH at the time was the floor price of her collection when I did this post. And now it's up towards about 25 or 30 ETH, just in those like 1 month or so. And all the other Braindrops collections have like started to run up because of, her pioneering sort of work here. So there's still opportunities to be had in NFTs. It's admittedly, it's like a lot harder to pick winners these days. You can't just throw a dart at anything. But there is still isolated pockets of sort of NFTs, performing well for collectors and investors.
I just wanted to make a very small comment here that on her Twitter, she did. So it's an NFT, right? So you can't have it in physical form, but it'll be in the Louvre. So it's going to be a link, a one of one. So the NFTs are one of one art. It's going to be a link to that artwork in the Louvre. But you can go and buy that artwork right now on OpenSea for 44 ETH or $68,000. So that, it's the whole phygital thing. So is it actually in the Louvre? No, not really. It's an NFT. What are you paying $66,000 for? It's for the link to go to that NFT. So you can't go to the Louvre people and say, hey guys, I actually own this NFT. Can you give it to me? That's not how it works, right? So like it's a whole new concept of of people getting their head around this whole art NFT thing. I just think it's interesting. You can buy the NFT for 44 ETH on OpenSea right now.
Could you imagine like old mate DGen that lives in his mum's basement that just goes down to the Louvre and he's like, ETH, I own this. What are you talking about? Like opens his mobile wallet and just shows them and like tries to take it. That would be amazing.
I don't know. It's just weird. It's weird. We'll get to a point where we figure it out, but I don't think we figured it out yet.
Yeah, for sure. So still like watch this space with NFTs. I think if the whole crypto market continues selling off, I don't think it'll be that rosy of an outlook for NFTs. But so far this year, they've started off, pretty strongly overall. We will just close it off before we get to member questions. Just the final one here, update, probably a major release from Uniswap. So probably one of the most well-capitalized and biggest teams out there, aside from the core blockchains themselves. They actually launched a mobile app last week, which is available on Android, similar to Collective Shifts, and not yet on iOS. But it is essentially like a mobile app, a mobile wallet. So, you've got a lot of these projects now launching wallets and, yes, there's a lot of them, which is, good and bad. But it's a really sort of symbolizes or is indicative of everyone's push at the moment to try to improve the usability or the user experience of crypto. Because if we're always going to be on our desktop, like, to be honest, like I don't think crypto is going to reach the masses if you have to use it on your desktop to be like safe and confident. So it's good to see like these projects continuing to push towards mobile, and you can easily switch even between networks as well with this app. So you can go from Ethereum to Polygon to Arbitrum to Optimism, which is all pretty cool from like the convenience of your phone. So I definitely haven't used it yet, but it's a nice trend to see the space going in when you compare to a few years ago where there really wasn't that many mobile wallets at all.
Yeah, it's awesome. And even though we're talking about Uniswap, we need to be talking about the Collective Shift mobile app, Matt. That's where it's at. So we released that last week, had a bunch of downloads and a bunch of feedback as well. So a few kind of enhancements and bugs came through. We're patching those up and they should be ready for release early. Here we go. Look at Leon. Should be ready for release early next week. So we're going to keep iterating on this app. We're still pushing through the iOS one. And again, probably similar to Uniswap, working through a bunch of compliance with Apple. And once we've cracked that, we'll be releasing that app too.
Yeah, members, go download the mobile app. It's very easy. There'll be a tutorial coming out soon, maybe not today, but maybe next week. It's great. You can just scroll and scroll and scroll, and you can just go and find the items that you want. You can't see it well so far, yeah.
It was good. I was really impressed with it. And it's easy to check out your dashboard and get the latest news, and you don't have to log in. It's one click. It's just so much easier. And like you were saying, Matt, bringing that kind of experience to crypto as well that Uniswap are doing, having it on your phone, not having to go to desktop and log in and load a browser and do this, just use like biometrics, click one thing and away you go, is just so much better.
Yeah, no, it's encouraging to see. Hopefully, it can continue and Apple can be a bit more accommodative to the crypto space as well. Fingers crossed. But yeah, we will leave it there for those listening to the public recording the podcast or watching on the YouTube channel. Thank you for tuning in. And if you did want to know more about what we do here at Collective Shift, you can head to our website at collectiveshift.io. And even we have our strategy calls, which you can book a free strategy call with our founder Ben to learn more about options available for crypto investors and just ways to think about the market and related sort of topics. So yeah, we will tune off for there, and we'll see you again next week.
Thanks everyone.